Hi, good morning, traders. Today I like to share something which I've been working in. I've been working for the past couple of weeks, right? Together with one very knowledgeable uh, educator from academy, right? He was working with a very big data company and relate to his PhD study. And I told him that I need something, some kind of table that can show me now which country economy is at risk or doing better, etc. And the variable that which we input is based on the 12 factor that you can see on the screen here, right? Example, we base on the manufacturing PMI, we base on the country interest rate, the unemployment of the country, right? Balance of trade, their foreign reserve. Now you might ask, why foreign reserve is important? Because now if the company example, you can see that we have this government debt to GDP, current account to GDP. Now the reason why we saw the Turkey crisis last couple of weeks, it is mainly due to this, the fiscal spending, the debts in Turkey, right? They have relied so much on the foreign direct investment, the funding from investor from overseas, and also their foreigner investor willing to buy the debts. Now Turkey have choked up so much debts that by next year they are supposed to pay back their debt plus interest for more than 200 billion US. And Turkey don't have that kind of money, right? In their reserve, they only have less than 80 billions. And yet they have to come out about more than 200 billion US dollar, right? And there's no way they can find money unless there's some company or some country willing to lend them, right? Maybe China, right, or the EU, right, being blackmailed by the Turkish president Erdogan. Yeah, if otherwise they will open the floodgate and all to let all the refugee go to flood the Europe, right? So I mean, so you can see that this is actually very important. That is the reason why we see the Turkey currency crisis, right? And of course also because of their double-digit inflation, 15% inflations, and yet their president Erdogan refused to increase interest rate until this week they increased to 24%, and we see the Turkish lira start moving back up again, right? And so you can see right now the government debts, their spending, their current account deficits, and how their foreign exchange reserve, right, play a very important role in their currency. And these are some of the variables that we used, right, to determine whether that country economy at risk or currency at risk or not, right? And some other factor, example, we talk about the retail sales as well, the producer price, right? And then we talk about the GDP growth as well, consumer spending. These are all very, very important, right? It basically tell us many things, right? Whether the economy is doing well or not well, and of course the balance of trade, right? And we sort of money supply, etc., right? So with this kind of 12 variable, right? We came out with, we use some kind of formula, right? Which will have a scale, right? And a reading, a numeric represent whether based on these 12 variable, whether the particular country, the economy is doing well, and therefore it will affect the currency, right? And then based on these 12 variable, we get a total strength index, right? You can see here. Okay. Now, the higher the number, obviously, it means that the currency or the economy is doing pretty well. And if the currency is doing well, then we expect that currency to move higher, right? So how we make use of this table? Very simple, right? So we pick the currency which is very strong. Example, US shows 0.558, which is the highest. So that means that we are looking to buy the US dollar. All right. So if I'm going to buy the US dollar, then of course I need to pick one currency to sell. Now obviously I'm not going to sell the currency which is equally strong, right? So I want to pick a currency which is very, very weak. So obviously you can see that the currency weak is Australia and the euro. Right, this among all the 5 currency, I'll pick either one of these. Right. So of course right now you can see there are only 5 major currency over there. Right. Of course the full version you will see even more. Right. You will see some other currency, example the yen, New Zealand dollar. Right. You will see some other currency, example Swiss franc. Right. And some other exotic currency as well. Right. All will be listed there, and it will be very clear that you can see from here which currency and which economy doing well, and then therefore if the economy is usually doing well, we can expect the currency to move higher in the future, right? And we even have a table to show after upon getting all this total number, right? We are able to match them to individual currency. So look at the currency table, immediately you know exactly which currency you can buy and sell. The opportunity is very clear, right? Now, what you might ask, what's the difference between this currency heat map, right? Or you want to call it currency strength weakness table, right? How does it differ from other traditional those currency heat map that we saw in the market, right? Offered by the market. Now, the difference is this, right? Now, most of the currency heat map or currency strength weakness table that you saw that offer in the market, they are basically based on indicator. Now, what indicator I'm talking about? Example, all those technical indicators, not what we are basing upon here. We are all based on economic indicator here, right? It actually reflects the true health and the economic conditions of a country, right? But most of the market heat map, currency heat map, they are based on the technical indicators such as a moving average, right? Stochastic, maybe RSI, some they use a Bollinger Band, etc. Right? So basically, what this indicator do is, if the oscillator, example the RSI, the moving average, or the oscillator, they went way overboard, then they expect that the market likely to move back to the mean, and they say the currency right now is time to sell, right? And that is how most of the currency heat map offer in the market right now. They are based on the indicator, and this indicator, when we see a moving average cross, right, blue to red or red to blue, or whether we see a stochastic or RSI went overboard, it doesn't tell us anything at all about that country economy. Whether the economy doing well or not well, it doesn't tell us a single thing, right? So therefore, how can it tell us whether the currency is strong or weak, and therefore we should go and buy and sell? So it just doesn't make sense, right? To use certain technical indicator, to indicate whether a particular currency is strong or weak, right? So I think the best is we use some kind of economic indicator that has direct relationships to the country economy, right? I think this is more accurate, right? So let me show you some example. Now remember, these are all based on the 12 variable that I'm using here. It's more on the high level, meaning high level means higher time frame, right? So that means that you can't use this kind of this table to trade on the. You can't use this kind of a result that you get here to trade on the smaller intraday trade. Example, you trade based on the 15 minutes time frame, right? 30 minutes time frame, 1 hour time frame. Chances are you will fail, right? This table basically gives trader the benefit that by looking at the currency index right over here, you know where is the which currency or which country economy is doing well in the longer term, right? So this table is more suitable for those traders who are actually swing trader, right? Example, when you are trading based on higher time frame, such as H4 or daily, right? So let me give you some example, right? So now based on this strength, we obviously can see that the dollar is strong, CAD is strong. These are the two strongest. The weakest is Australia, and followed by the euro. This is longer term, right? So obviously we are looking to buy the US, sell the Australia, buy the US, sell the euro, or buy the CAD, sell the euro, or buy the CAD, sell the Australia, right? That's how the general direction I will do, right? If I based on this number alone, right? So let's take a look at the sum of this currency pair, right? Now if we take a look at this pair example, euro against dollar, you can see the euro dollar against dollar, it is in the downtrend, right? Why? Because just now we saw euro is one of the weakest currency, dollar is a stronger, right? So no wonder you see that euro is going down against the dollar. You might say that, well, this is a right now we see the markets euro start moving higher. Well, this is short term, right? But the longer time frame, the trend is down. Can you see that? Right? This is could be a temporary pullback, and potentially the euro might just go down if the fundamental remain weak, which I believe so, right? So again, you also want to sell the Australia, buy the dollar, right? Because Australia is the weakest currency, dollar is a stronger according to the table. Now look at the Australia dollar. It's only one direction down. Can you see that? Very clear. So now how we do it, how we use this table is, once I know I want to sell the Australia and buy the dollar, all I need to do is I just wait for price to retrace higher, right? And we sell high and buy low. That's all, right? So see which is strong is CAD, right? So as I say that we are going to sell the Australia, buy the CAD. Let's take a look. Australia CAD. Now look at Australia CAD. Look at the direction Australia CAD. Yeah, let me remove all this line first. Australia is weak. Canada is the second currency, is stronger. No wonder we see this Australia going down against the Canada. So how can we make use of this? Are we going to sell? If we are going to sell Australia, are going to sell when the price so low? Obviously not, right? We are waiting for price to retrace higher, a little bit higher. Then we start to resell again. All right. So I think this is a very, very simple yet easy to see. They give you a very, very clear look just at the glance. Immediately you know what currency you should look to buy and what currency you should look to sell, right? And of course, now where you're going to buy, where you're going to sell. This one, based on this table alone, you can't tell, right? You have to go to your charts, and that's exactly what in my program, order flow workshop seminar that I conduct in Singapore, Malaysia, and right now in Philippines, and that's what I teach, right? Okay, so that's it for these short sessions for me to introduce you this Order Flow Academy currency heat map, right? Thank you very much, and see you again next time.